All right, so today we're going to be shopping for a financial stock, possibly a utility stock or a real estate stock. Um, the real battle is between utility or real estate, and so what I'm looking at right now is the actual utility that we're in right now. And the question is whether we add to our position or do we add to the position of the real estate stock. And so what I'm going to be looking at really is just trying to see really kind of what's been working lately. Want to definitely look out into the future and see, what could possibly perform the best going forward. Because, whatever it is I get, plan on keeping. And then we're looking to see about either selling out of our current financial stock and getting into another one, or just holding on to one we have. So what I'm gonna do is let me just look at what I have here. This may be a little easier. That way, I can just look at them individually here. So, got now I'm not going to talk about what all the numbers and symbols mean because I did that in a previous video that can be looked up. I'll link to it if you want to check it out. All right, here we go. So, just going to do a quick side-by-side comparison just to really see what I'm looking at here. Let me blow this up for my own benefit. All right. So, dividend, really close. 1 month return, really close. Volatility, real estate's a little higher, makes sense. PE ratio, big difference, but I'm sure it probably averages out within those sectors. Net profit, looks like utility beats real estate. That makes a whole lot of sense. No current ratio for real estate. Definitely more cash in real estate. Just got a big cash dividend not too long ago. Loving that type of thing. See, real estate is actually adding assets and decreasing liabilities. Looks like utility is either getting rid of assets or increasing liabilities. That part I'm not going to worry about right now, but I'll have to do some research to see what's going on there. Utility paying a lot less in interest, which again makes sense. Regulated business. The betas are about the same. As far as where the price is, that is interesting. Let's see. Of course, the return for real estate is a bit higher. The scores are really close too. Didn't expect that. Okay, stop moving now. All right, so real estate is 34% away from its high. Utility is only 10%. Real estate is 13% above its low. Utility is 37% above its low. So what that tells me is that EQR is closer to its low than its high, so that's good. And looks like for the most part, see the alpha is a bit better, but it's about the same really. But I do the upmost, yeah, that part bugs me a little bit, but those numbers are really close though. So what I'm gonna look at now is just the differences within these sectors. Honestly, just because I'm curious. So I'm gonna look at real estate. I'm gonna look at utilities and see if I can pull some kind of average with just my eyeball here, since I don't have it mathematically set up. I can always do it this way. Alright, so average real estate volatility is 8.5. Average utility volatility is 7.3. Makes sense. Alright, so the PE ratio, which is what I was looking at earlier for the real estate, looks like the average is 28 and EQR is way down here at 5. That is that bothers me. And then look at this. This is something else too. Now this was the price last year, December 31, 2015. It was at $70. Now it's down to 60. It looks like a losing bet to me. And then we have XCEL down here, 35 up to 38. So small gain, but at least a gain versus losing money. I mean, but that PE is low as hell. I think I really want to do a little bit more research on that, honestly. Let's see here. The cash. See if it's going to give me an error or not. Yeah, of course it's going to give me an error. Just looking at this small average, 61%. EQR at 50. Yeah. So at this point, I'm leaning very far towards getting more utility, even though I know that it's going to fall a bit more, but I'm certain that we're going to see a jump at some point. If not this winter, then maybe this summer. XCEL is a good company, and they're doing some good things with some renewables and stuff like that. EQR, real estate is taking a hit. We got interest rates going up, so we're talking about having to renegotiate some of those loans. That's something that, I don't really want to get into, honestly. And see here, the cap cost on average real estate is 1.27, and EQR is at 2. So yeah, man, that's a lot of debt, and they're spending for it. So I think I'm gonna definitely go with the utility, just based on this alone. Seriously. The other thing I want to look at just real quick is I was looking at this earlier, honestly, so I'm not gonna do it again, but the portfolio that I was looking at didn't have EQR anywhere in it. All the best portfolios, anyway, didn't have EQR anywhere in it, but it did have XCEL. So, that pretty much seals it for me. This is the other thing that I was looking at, just trying to see what the different sectors were doing. This shocked me, man. I was not expecting this. But that 9% is due primarily to this big jump in Nucor. That's always been volatile. But look at this, man. The average, 2% a month, And then you look at these numbers going across here. I mean, that is something, Lose 12% one month, gain 12% the next month. Down, up, and then you get this gradual increase to this huge number here. I mean, that is craziness. And then you got Weyerhaeuser here, really kind of doing the same thing, but I mean, just not putting up the same numbers. I mean, just 4% versus 29%, 1%. About the same. But then this drop is what really killed him, I think. Same here, same there. Again, big drop, big drop. Made it up there for sure. But yeah, just not the same volatility at all. Um, that's a big one. And then consumer, my goodness, that's this huge run up in staples. This has been a really huge runner too. Staples has really cheap stock, man, easy to get into, and has a huge number. See, when I see numbers like that, it makes me want to go check it out and see what's going on. But I've been looking at Staples for a while. They've been doing pretty good. All right, so anyway, real estate and utilities. So real estate negative 2.7, utilities negative 3.62. But when you look at the individual companies, we see where's our EQR? EQR negative return, small number but negative return. Then we got DLR up here at the top, big return every month. And I mean, this thing has been steady. It really has. I mean, it has a few. Well, yeah, for real estate, it's pretty huge at 13%. Another 12% there, 12% there. But it's been fairly steady though. Really has. Hasn't really been on my radar. But so on average, EQR is at a negative 85. And if we look at utilities, even though I don't know why that's there, even though on average utilities did worse than real estate, looks like where we are. Here we go. Looks like XCEL is beating the pack. So I mean that's where we want to be. I'm pretty much sold on that, man. I'm sold on that. You know, not a big drop compared to the rest, really, this past month. But utilities have been beat up real bad. All this interest rate speak and just the nature of the business really been beat up. If we get a really cold weather, a cold winter, then we can see a tick up in utilities. But for right now, man, they're just not in favor, as they say. All right, so the next thing I'm looking at here, and this is really kind of looking at the financials too. But this has been the best performer past couple months, return and alpha, which makes sense because dividend stocks are getting beat up. You definitely want to see some returns. Same thing here, dividend beta and alpha worked out the best. I want to kind of look at that because I'm curious to see if there's any big differences in those two. Just curious. See results. No, I need score. See dividend beta alpha and return alpha. Let's see dividend beta alpha. Let's look at this real quick since I clicked on the wrong thing. Dividend beta alpha. There we go. So yeah, negative 14, and I already know returning alpha is going to be pretty bad too. Well, 5%, so it's not bad. Now let's click what I was trying to get to. There we go. All right. So looking at dividend beta alpha. So you got Plains All American, EMR, Las Vegas Sands, Seagate. You know, I'm really shocked to see like Pfizer and Philip Morris in this list. But you know, it makes sense because the dividend and the beta is there. Alpha is only a small part of it when you put them all together, I think. But Yeah, okay. So it shakes it up a little bit. And then what's the return to alpha? So this one's got to be completely different. Completely different. This is the straight up high flyers. I mean, high flyers. Here we go. Yeah, man, completely different. There's not one. I don't think there's one stock in that other portfolio that's in this one. Microsoft, L Brands, Dow, Paychecks. And so the question is here, what stock do we see in the portfolio that's performing the best right now? And that's our real estate EQR. That sucks. Because now it makes me re-evaluate, right? What I was looking at previously. But, I mean, my goodness, man. Everything points towards going to utilities. Even though, real estate has, and let me see. Let's look over the past couple months. So we are. Yeah, I mean, look at this. Real estate, yeah. I mean, utilities just been getting dogged, man. Dogged. But real estate ain't much better. It's really not. Look at this, 9%. It's not much better. 5%. I mean, there's no question. Right now, real estate, utilities, that's just not going to be the favorites. But again, the question is what company is going to come out better at the end of the day? Okay, that's what we have to look at. And I'm looking at. I mean, and look at this return. That's not a nice return at all. But it happens to be the highest for November. Well, wait, is it? No, it's not. Something's not right. Hold on. Let's go back. Go back. Returning alpha. Score EA4. That's what's going on. I did not change this. Uh-oh, that's my bad. Let's change this real quick. And you know what? I'm not going to edit this. I'm not going to stop it. Nope, just going to keep going. Because that kind of stuff happens. You don't want it to. Try not to, but, it happens. All right, here we go. So, actually, equal weight wins out for November. I'm not even going to entertain that. Seriously. I mean, it's never, ever been top portfolio. And I'm going to imagine the only reason why it even made top portfolio this time around was because there was some company in there that just skyrocketed, like Nucor or something like that. So let's see. So score CK3. See what portfolio that is, because I don't know off the top of my head. CK3. Equal weight. No duh. FN. Alright. So, this is it. Got Target, AT&T, Marathon. So, which one of these ran up? Was it neither? It's just a solid performance all of a sudden? So, again, looking at this, I mean, none of our stocks are here. The only one that I'm in currently that's on this list is Weyerhaeuser. And that's definitely been somewhat of a laggard. Better than than, you know, some, but still a laggard. And we see DLR. Oh, maybe that's what it was. I remember, didn't DLR jump up in real estate? Where we at? DLR? No, it didn't. I don't know. I can't call it, man. And I'm not gonna look for it. But point is, it did jump up. So that means we have to change this thing. There's IO FN. Let's do this real quick. A little bit of work. Oh. So what happens when you only do this once a month? Little small stuff like that you forget. Why did that not work? FN. Ah, no wonder. FO. No wonder. Alright, now we can drag the sucker across. And I hate when it does that. I change it every time. I have to change it in the rules though. Alright, here we go. So this is how I'm going to pick the and this has been the best performer over the past couple years actually. I think this thing is 2 years. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So 17 months, about a year and a half. It's been the best performer, man. But it is freaking volatile. It does its thing. That's beta return and volatility. Makes sense. So that's something I look at too. And do I even have, let's see, I don't believe so. Yeah, let me do that. 18. Alright. Wow, look at those columns in the back. Yeah, November was a good month in the market. It really was. It was a good month. And so I think at the end of the day, what this is really about is when the market is screaming up like this, you know, where do you want to be, right? That's the idea. Where do you want to be? And I mean, as far as performing, beta and up, beta and down. Let's see. When we look at beta and standard deviation, which I'm going to try to just pick out of this thing. Here we go. It's been the best performing portfolio for performance versus volatility. And you know, it holds its own. It holds its own. It does its job. But yeah, I mean, when the market is screaming like that, you don't get a whole lot out of it. You know, at the same time, you know, when the market is down, then you get a decent return and you can be happy with yourself. So that's the way it works. You know, gonna miss out on this screaming stuff. And the question is you know, how long is this gonna go on? You know. And so we'll see, you know, at the end of December, I'll go back and reallocate everything. I'll add some more companies to the basket that we currently have, and you know, look at portfolio performance again and go from there. But right now, we're going to stay where we are. So let's take a look and see. Past 17 months, and actually what I'm going to do is I'm going to cut this back to January, because even though we are concerned with long-term performance, I do want to see what has worked for the past year to date. So as far as finance, and this little pink thing got 1 TD, 2 TD, and I got to come up with a better way to count this stuff versus manually. See, AFL here, 2 AFLs, SLF, 2, 3 SLF, BNS, 1, 2 BNS, 2 MFC. So it appears that MFC has definitely been a better performer over the past couple months. Over the past year, it's been SLF with actually no. Look at this. I missed one. 1, 2, 3 MFC, and then we have 1, 2, 3 SLF. So there we go. So we have a tie. I mean, over the past year, it is literally tied. So what that means is I have to go to my table here and see what's really going on. Let's just take this out. We're going to look at finance only. Alright, and lucky for us, they're right up under each other. So on average, SLF has performed better over the past 17 months. As far as the financial spike goes, MFC beat out SLF. But see, it didn't beat it out last month. See, didn't beat it out last month. It just happened to be in a portfolio that beat it out. Looks like September definitely beat it out. But the rest of the time, I mean, ooh. But see, yeah, all right. Now, yeah, big difference. So, I mean, there's times that these things greatly differ. And then there's other times where like, kind of, and that's why averages are so important, and on average, they're about the same. Definitely, best in the sector for sure. There's TD there. So I don't know. Let's look at the fundamentals and just see what's kind of going on there. So if we pull out just real estate, just so I can look at some averages here. All right. No. Finance. What am I thinking? Finance. There we go. Finance. All right. Average dividend 3.5, and SLF comes in at 3.1. MFC comes in at 3.1. So same, no difference. 1 month return, SLF is slightly worse, but the volatility is the same. PE is the same. Both are kind of high right now. CM, AFL, my goodness, that may be where you want to go. See, net profit, yeah, SLF blew everybody out the water. I mean, everybody out the water. How much cash do we have on hand? MFC has a little bit more cash. Looks like they're putting on more assets or taking away less. And cap cost about the same. Beta's about the same. Now, let's see where they are. So expected return, of course, MFC is gonna win out. Oh my goodness, look at the score. These guys are literally right next to each other. I mean, SLF has MFC beat by like 0.001 or something crazy like that. Alright, so 17 off the high, 12 off the high, 31 off the low, 35 off the low. Again, same. Alpha, SLF comes out a little better, and that's good right now. We definitely want that alpha, especially in the finance sector. And then as far as movement goes, looks like more people put money into MFC when it's moving up, but then they're selling out more when it's moving down, which makes sense. I mean, people are trading this thing. They're not really holding on to it, looks like. I mean, it's not much of a difference, but close enough that I can make that call. Let's see. Well, over the past year, definitely lost. They've gained, but it's been about the same. Really has. I mean, MFC looks like a good trade right now. SLF looks like where we want to be for the long term. So I think I'm going to stay with SLF, and I think I'm going to add to the XCEL. That's what we want to do. So that's it. I know I rambled. I know it was kind of long, but it's my first one, and I enjoyed it. So I hope you enjoyed it. Hope you're at home doing the same thing or thinking about doing the same thing, and I'll holler.